my name is Teri Bendit, and I am the managing broker. I'm the president of Senior Reverse Mortgage Group. We service all of Chicagoland, every county. I have been a mortgage broker for over 20 years in Chicagoland. We specialize only in reverse mortgages as opposed to mortgage companies that do a few on the side. Because we specialize in reverse mortgages, we're best able to get you the products, the regulations, the laws that are really important, that are always changing to best suit your individual needs. I just wanted to talk to you a minute about reverse mortgages. There are many, many myths out there, and many people are missing out on a great financial tool that could be available to them if only they did learn the truth. That's why I'm doing this video. That's why I do free educational seminars all over Chicagoland to educate seniors, to show them that this tool, which doesn't have to be the only financial tool that you have, but this tool is a great, great product to be able to enhance your senior years. Let me explain a little bit about what a reverse mortgage is, because many people tell you what it's not, but I'm going to tell you what it is. What it is a federally insured loan backed by HUD and FHA. Okay, it's for seniors 62 years old and older who have at least 50% equity in their home. If you have a need for money, for cash, which you will have, the longer we live, the more we need money for unexpected things that come up. The longer we live, we know more unexpected things come up. A roof can break, a car can break, medical needs can occur, family members need additional money, might need help. So what is a senior to do? Let me explain to you that there's two phases to life. Number one is your acquisition phase. That's when you're young and you're working and you're building up money, you're saving for your retirement, you're taking care of your family, you're out actively investing or saving or doing whatever it is to be able to ensure that your retirement is one that you can enjoy. The second phase that we have is called the distribution phase. And the distribution phase is when you start taking the money that you've built up all of these years. Now, in the distribution phase, it is very, very difficult sometimes for seniors to be able to get more money. You may not feel like working. You may not feel like borrowing money. You may not feel like getting loans. So what is the senior to do? It's a frightening time when you see your savings go down every month, you see your investments go down, possibly in a downturn market. So this is a great opportunity for seniors to be able to get the cash that they need. If you have a need for additional income or additional cash for medical expenses, to not have to go into a nursing home, which by the way is extremely expensive, could be over $100,000 a year. If you want to stay in your home, if you want to not lose your home, if you want to be able to give some money to your children or grandchildren, if you want to be able to maybe make home improvements to make your home easier to live in, if you don't want to have to move, this is a great financial tool for you. There are 4 different ways that you can access the equity in your home through a reverse mortgage. Number 1, you can get a lump sum payment. Number 2, you can get a line of credit. Number 3, you can have a monthly payment like Social Security, which goes to you every month. Number 4, a great product is a reverse mortgage for purchase, which in other words, you are able to purchase almost double the amount of what you think you can do. You put a reverse on the purchase. If you have $200,000, you may be able to get a $350,000 home. Now remember, on a reverse mortgage, you make no monthly payments, okay? You don't have to pay it like you do a mortgage. It becomes due when you die or sell the home. And how that works, it's called a non-recourse loan. No person pays for the loan. Your heirs don't pay for it and you don't pay for it. The house pays for it. So for example, if the house is worth $200,000 and you have a $100,000 reverse mortgage on it, the heirs have up to a year to sell the home. The home would sell and $100,000 of proceeds above the loan goes to the heirs. Now what happens if the property goes down in value, which has happened before? Say you owe $100,000 and it goes down to $50,000 the value of your home. Well, because it's federally insured, the government actually would eat the difference. So no person is responsible. That is wonderful, wonderful product offered only to seniors. Now, because you don't make any monthly payments, if you choose not to, you don't have to. You could say, well, how about me losing my home? Can I lose my home? You never lose title to your home. Never. As long as you pay the taxes on the property, you maintain the property in good condition, and you pay your homeowner's insurance policy. That must be maintained all the time. If you maintain that, it is guaranteed you will not lose your home. You've heard it said, well, I know someone that knew someone who lost their home with a reverse mortgage. Well, maybe they didn't tell you they didn't pay their taxes, or they didn't keep the home in good repair, or they moved out. So that's another myth. You may want to check that out. Another thing that's really, really important is the fact that this money is guaranteed to come to you irrespective of the value of your home. So say you take out $100,000 again and the home drops value, you don't have to make up the difference. So that's why I tell people, while your values are up, go ahead and do it now. You're going to need the money sooner or later. This money is also non-taxable. That's important. You already paid with taxable dollars into the equity of your home. So think of it like you're laying on a big bunch of money in your equity of your home. That's why you bought your home. That's why you paid the equity, so that you never have to leave the home and you don't have to make monthly mortgage payments. This is a way to do everything all at once. You don't have to leave your home. You don't have to make monthly payments, and as long as you continue with your taxes and insurance and homeowners, and you get the cash as well to do whatever you want to do with it. There's no restriction on it as long as it's something legal, obviously. You must maintain the property as your primary residence. You can leave for a few months out of the year, but you've got to let someone know about that. But basically, it's your primary residence, okay? So another thing that's really important is that your heirs, remember, don't have to pay it back. And another question is, well, I'm going to leave less to my heirs, aren't I? Well, no, that's not necessarily true. Number one, you have to have the money to live. It's got to come out of some pot somewhere. So the longer you live, the less you're going to be leaving your heirs naturally. Also, remember, the property's going up in value hopefully over 10, 20 years. So that's another consideration. Oftentimes the children are making more money than the parents, and they have 30 or 40 years more than you to acquire more money. So this is something you may want to look into. We do educational seminars all over Chicagoland. Please do visit my website and see where there's one near you. If you can't make an educational seminar or an expo or a fair that I'm at, please do call. We have free consultations. I'll tell you exactly what you are qualified for. We will meet with you in your home. You don't have to come to the office unless you choose to. We'll meet with you in the home. The closing can be in the home. It's hard to get out sometimes for seniors. This is a great, great tool. Please at least investigate it, and if it's not for you, that's fine, but it could be something you're missing out on. So please do call me, and thank you so much for listening.